Now, the niche that we're in is a little sub niche of midterm rentals, and we do midterm rental insurance, which is essentially now corporate housing. Now, we're not renting to the traditional person next door who's looking for the 3 month stay because they have an internship or some fellowship or a new job or a travel nurse. That's not what we target. We actually target the corporations who have to relocate families due to unforeseen events like a tree falling on a house or pipe bursting. And the
Oh,
insurance company is paying us a premium to solve that problem.
all right, guys. Welcome to another episode of The Report. Today, we are back in the studio, and I got a special guest who I actually just recently connected with out in Nashville for the STR Wealth Conference. And I was on his podcast last year. He actually specializes in midterm rentals. I got my man, Ruben Kanya. Ruben, welcome to the show, brother.
Rich, man. Thanks for having me, bro.
Yeah,
Really
dude.
appreciate you.
I appreciate you you coming on, man. You're recently in town for the for Jesse
Yes,
Jesse Vasquez's
absolutely.
midterm rental conference. How was it, man?
It was nice to see everybody in the flesh. I think I was just saying this offline. Feel like it's 1 degree of separation at this point. You see people you're either connected with or they're connected to somebody you know. So I think for me, it was the conversation in the hallways that like really have the most impact. Jesse did an amazing, job bringing in like Codie Sanchez, like great speakers. Noble was out there doing his thing, and I think the key takeaway, man, you got an asset, and you can just that same asset with different knowledge can be flipped into a different strategy with a different outcome. And it's like when you think about that, kind of really makes you reflect on like this whole, paradigm of real estate altogether. So, but otherwise, man, blessed.
I saw you guys were in Coronado.
Yeah, yeah,
Last year was out in Mission Bay.
yeah,
And I saw this year was in Coronado, the Cays down
yeah.
there. But what was the highlight, man?
For me personally, the highlight, my key takeaway is honestly the people, right? There's a lot of people I've either, through content. It's really cool when someone's like, oh, I've been listening to your pods, cool. Like, and you hear the feedback, or you just literally hear people's pain points and blockers and say, okay, how can we come up with a solution? The highlight, man, I mean, it was cool to see Codie
Yeah.
do her thing. Codie Sanchez.
What did
She's
she speak about?
it's just private equity is being like, if you really want to build that wealth quick, and if you look at what people have done in the past, right? Private equity, man, all day long. And it's fascinating when you look at that. And it's interesting because then, Jesse kind of asked her, it's like, well, what do you think about real estate? And she's like, it's a good storage of wealth vehicle, the way she sees it, which makes sense, right? Because we know a lot of business
She
owners.
doesn't buy real estate?
She does, but she doesn't like it as a strategy to make money fast,
Mm.
which I think a lot of entrepreneurs will agree that, okay, yeah, like we have offense and real estate's our defense. However, the caveat to that is because when there's a niche, right, kind of like what you're doing with boutique hotels, that's very niche, and there can be like a business model built on top of the real estate,
Right.
which I think is different. I
Right.
think it's different. People, and you see that a lot with like co-hosting. You have a co-hosting business, you can sell it. You have a management business, you can sell it. That's a business built on top of or within the real estate vertical, right? So it's interesting. It's a good perspective too to be like, okay, that's how the big boys and gals are doing it, and that's their perspective on it. I think it's a good reminder as well as, what are we building? Right? Are we building a sellable asset? Are we building just real estate? Or are we using real estate as the vehicle or vice versa? I don't know. I'd love to hear what your thoughts are on that, actually.
Yeah, I agree. I think, real estate investing is a long-term game. And, it's a way to preserve wealth. It's a way to hedge against inflation. Rents go up over time. I think asset values go up over time.
Yeah.
The Federal Reserve just printed 80% of the currency over the last 4 years. Now, a lot of that money has been sucked out of the economy due to the rate environment. And so a lot of that money is being parked in CDs right now and in government bonds. But when the rate environment does stabilize, which it will at some point, I believe that we're going to see asset values go up again, and we're going to see rents continue to go up. The fact that, I will say this, I was thinking about this the other day, the fact that 80% of the money supply has been printed and interest rate environment is more than 2x what it was. I mean, right, it was 2.75, 3%. And now, I mean, mortgages after the spread is about 7.5. Like the fact that the real estate market has been relatively untouched and unfazed is like a testament to like how strong the true fundamentals are behind real estate. Now, when I say that, I mean supply and demand fundamentals, demographics that are shifting, and just the shortage of housing that's out there in general. It's a strong place to park money.
Keyword.
And so,
Yeah, 100%.
I believe right now, while the rate environment is still high, I think there's not a lot of buyer competition. You can go out there and negotiate good deals. and buy stuff on your terms, I think right now is the time. I'm not afraid to buy anything right now because the stuff I'm buying is I'm holding long term.
Yeah.
I'm not buying anything that I need to flip in a year,
Yeah.
you know?
It's interesting because when I hear that too, and I think there's different levels of real estate. I think there's when you get very creative. So first of all, what you said about the supply and demand, that's what we've seen in Atlanta. That's our market, right? Where you had a bunch of people coming in from New York. You got, people running away from the West Coast sometimes, or maybe remote jobs, right? Where they're going to states like Florida, they're going to states like Georgia, and there's just not enough supply to keep up with the demand. So then, even though interest rates are high, you still haven't seen a huge kind of shift in, the amount of, again, on the price of the product as well, but at the same time, the need for it. So that's interesting too, because you're right. The fundamentals, if you have, supply and demand, all goes back to the same thing, right? But the other thing too, like when I think about what Codie said, it's like I feel like I don't know how savvy we are with when you talk about real estate. There's different levels to it, right? We're talking about like people are doing cost segregation. They're doing a lot of different things. They're refinancing. There's a lot of leverage like that you can use in your business to get more out of that vehicle in itself. And I feel like not everyone's doing it the exact same way. And I know right? Value add, like that's a whole different play. That on top of the real estate, where you're not just parking the money in real estate, you're actually using it as a lever. That's pretty interesting, which is why we love the midterm rental insurance space, because there's a lever in that. There's a huge lever to pull with an existing asset as well.
Totally. So, before we jump into the midterm stuff, and I have a lot of questions about it, actually to date only had one guest on, exactly a year ago that we talked midterm rentals, and that was Jesse Vasquez. So I have a lot of questions around it. It's definitely a very intriguing space, in my opinion. But first, I'm curious. So back to Codie. And by the way, I met Codie twice now,
Hmm.
both here in San Diego.
Yeah,
I don't know if a lot of folks know this, but she lives in San Diego part time.
I didn't know that.
Yeah, Austin and San Diego. And so I first met her a year ago at the San Diego airport. And then I met her again a couple months later here in Lit, Italy. She was just having dinner. And anyways, so talk shop. She's like, yeah, I'd love to come on the podcast sometime. Drop the email. The team's been in contact, but we haven't been able to like schedule it yet. So she'll come on eventually. But I'm curious, what types of businesses was she pushing?
She calls it like the ugly, kind of businesses. But one of the things she talks about too, because I'm in, I don't know if you know Carl Allen.
No.
I'm in his mastermind. It's a business buying mastermind. I've always been fascinated about it too. But it's like
What's his last name?
Carl Allen.
Allen. Okay.
He's like a British guy or something like that.
Yeah,
He's
I don't
not
know.
from here, but
Yeah.
he does a lot of stuff like that. And one of the things that jumped out to me yesterday that she's talking about is the negotiation of equity, which is essentially what you're doing in like boutique hotels with seller financing. You're buying a business, right? Like at the end of the day, there's P&Ls. There's either a book of business of people who keep coming back. So essentially, and that's what I'm saying. Like for me, when I think about like your business model, to me, that's buying a business. It's different than, and I think when people say that real estate, you don't like it as a vehicle type thing, that maybe they're, again, I don't know exactly, right? Because I don't know how they feel about it, right? If they're talking single families, that's one thing. But if you're talking about buying a business on top that has a book of business, that has a list, that has that to me, you're buying a business. So one of the things that she said is she really focused on the creative financing or financing for equity. So for example, I might be really, really good at marketing, right? And I might say, hey, you get X amount of episode on the podcast. How much is it costing you to not convert as high when you have a call to action?
Mm.
So I might be able to come to you and be like, hey, listen, like I have a solution, but I don't want to get paid until we get the result. So what would it look like for you if I increase your conversion rate to, I don't know, call it 25% more? And I just, on top of that, you gave me 5% of the equity, because now you maybe, I don't know, 3x what you would typically get based on maybe you have some mastermind you're selling that's going to make on the back end. Like that's what she kind of positioned it as. So it's, I don't recall so much just like, the laundromat and all that business, but she was really trying to, she actually gave a really good case study, right, of how you can actually position yourself to start having equity in existing companies by providing a solution,
Mm.
like almost like consulting for equity. So that's a big thing that even Roland Frazier, I don't know if you know Roland Frazier,
No.
he's the guy that traffic and conversion, him and Ryan Dice,
Okay.
big marketing guys, they buy businesses all the time, and they do it with no money down by just consult for equity. If you're a subject matter expert and some guy's trying to convert his multifamily into boutique hotels, you might say, hey, I want equity into this deal, and I'll show you how to run the play. And so that was a big thing that kind of jumped out. I love that. Consult for equity.
I like
Yeah.
that. That's it.
Yeah.
Definitely a unique model. Yeah, I'm interested to kind of see. I mean, with the 40 million baby boomers retiring over the next 7 years,
Mm.
and a lot of those small businesses that are, either going to dissolve or they're going to be passed along to children or they're going to sell for pennies on the dollar. I think there's a huge opportunity out there
Oh,
for a
there's
lot of the
huge.
folks.
There's more businesses that have there's less buyers than there are businesses for sale. There are less buyers than are businesses for sale because to your point, there's like the call it Gen Z generation might not be interested in mom and dad's restaurant. And
Yeah,
again, mess restaurant maybe is a bad example because there's a lot of like profitable businesses out there. Maybe you're selling tires. It's like,
right.
dude, I have no interest in taking over that. And so they're trying to sell it, but no one's interested in buying these businesses or there's no legacy, right? And so we actually have selection in the marketplace when it comes to that. And that's why I joined Carl Allen's mastermind. Cause I'm like, man, like I don't want to, yeah, you can do anything, but not everything at the same time. But it's a big one. I've read books like Built to Sell. You know, one of my partners had an exit when we were early in college, and I was fascinated about it.
Yeah,
Now we didn't sell our e-commerce business the way we wanted to, but we had put it out for sale. So it's things like that when you could just buy into things. I think
yeah,
we get caught up as entrepreneurs, like starting something from scratch, when really there's like an existing business where the owner might just want an annuity, where they want to step away from the business. They're tired, and they just want you. They'll give you the lion's share if you just give them that kickback because they just don't have anybody to run it. And to me, that's
yeah.
huge, man.
And another way to get into these deals to where maybe it's low or no money down is to structure seller financing with these mom and pop sellers. You can structure, sometimes very low or no money down seller financing. A lot of these older sellers that are not going to be rolling their proceeds into another business or another real estate project, they would prefer cash flow ongoing in their retirement. They can live off of it. And then also it reduces their tax burden. And so I think often you can structure a win-win situation for a lot of these folks. And, with the rate environment of where it's at today, seller financing is very appealing from a buyer perspective. Pace Morby talks about it all the time.
Yeah,
Like, even 100% seller financing, principal only payments, which would be 0% interest.
it's crazy.
It is crazy. It's a real thing.
Yeah, we just did a sub two deal. I'm trying to figure out a way to tap in more into that because it was night and day. Sub two into MTR, insane returns.
Mm.
Yeah,
So speaking of MTR, midterm rentals,
yeah.
for listeners out there that aren't aware, give us the summary of what is the definition of a midterm rental?
Yeah, yeah. So I want to take that even a step further, right? Because we hear MTR, which is it's interesting because I spoke to a lady and she had been in a business in corporate housing for 35 years, and she comes to the MTR and she thinks it's cute because it's just really it's an internal term that we use as investors, SDR versus MTRs. On the front end of the business, these corporate housing has been around since the 60s, right? But a midterm rental is 30 day stays or more, right? And what we've done is
Less than how many days?
so it depends. So 30 days. So when you say less than how many days, what do you mean?
Because like a short term is less than 30 days, midterm is 30 or more, a long term is considered what, 6 months?
Yeah. I
So
think long
midterm
term
is
is traditional 12-month leases.
okay. So
And that's
midterm is anything less than a year,
yeah,
but more than 30 days.
yeah.
Okay.
That's a good way to put it. And the reason that's actually important, what you're saying is that's the pushback that you're getting in the marketplace when you have to relocate someone, right? Or someone might need temporary housing and the traditional long-term rental investor. And the reason why traditional long-term rental investor is doing 12-month leases, it's also because that's what the banks look at when you're looking to get financing. You have 12-year rent rolls, right? And so and I know that because I was just under contract and I'm showing them my model and they're like, yeah, but the underwriting is not going to like this, that you're having a bunch of different 6-month leases. So that's a whole nother conversation where you can have another entity kind of that's your own that rents out
Okay.
to yourself, etc. But in short, going back to your question is a midterm rental is that, right? More than 30 days, less than 12 months. Now the niche that we're in is a little sub niche of midterm rentals and we do midterm rental insurance, which is essentially now corporate housing. Now we're not renting to the traditional person next door who's looking for the 3-month stay because they have an internship or some fellowship or a new job or a travel nurse. That's not what we target. We actually target the corporations who have to relocate families due to unforeseen events like a tree falling on a house or pipe bursting. And the
Oh,
insurance company is paying us a premium to solve that problem. And it's a big problem because the alternative is putting that family into a hotel, and there's no dining room, there's no living room, and there's no backyard for the pets to run around.
Interesting. And so, how do you get in front of these insurance companies and demonstrate that you're going to be the guy for their job?
Yeah, so interesting. So these insurance companies are actually looking for bulk. So when we say we work with insurance companies, we're actually not working with the insurance companies, because insurance company is like a State Farm all state. They actually work with the relocation agencies that can handle the volume. It's almost like a staffing agency, right? It's like if maybe you might be hiring people for yourself, but maybe you could go to a third party company to be like, hey, listen, I'm looking for an executive assistant or an asset manager or whatever the case might be. And, I'll go and source the marketplace and bring it to you. So these insurance companies are no different. State Farm, Allstate doesn't have the time to look around on Airbnb to find a listing for a mom and pop owner. So what they do, they'll work with a relocation agency like an ALE Solutions, a CRS Temporary Housing, THD. They've been around for decades, and they'll work with them to then source a temporary housing solution. Now, those agencies, temporary relocation agencies, are looking for mom and pop owners who understand what we're doing. And to answer your question, there's two ways to do it. Either you got to know where to list your properties in their databases, which are very easy to enter, and you got to be optimized on OTAs to be able to receive the business, which number one is availability.
So, availability, how does that kind of work when you guys are doing your schedules, right? So if you got someone moving out and then, someone wants to move in, but there's a little bit of a gap, how do you treat that if there's a 2-week gap?
So the biggest question that we typically get is, what market should I invest in? Stuff like that. Going back to the foundation, like for these MTRs, how to position myself. And my answer to that is always position yourself to be in a market that allows for short-term rentals, because we run a hybrid model. Now we've gotten pretty good to the point that we can have a back-to-back booking, but what will happen, maybe there's 2-week interim of empty wide open and we go back to STR. So I want to make sure that my exit strategies accounts for the fact that either the regulations are covered and actually can have short-term rentals and I'm allowed to do it. I see so many people, they're in like HOAs that require 6-month minimum. I'm like, I don't like that, because I want to have an exit strategy. But to answer your question, you do a hybrid model. You have short-term rental listing and you have a midterm rental listing,
Okay.
right? That's what you
Can
do.
you also tell the guest that's gonna be checking, are they called guests or are they called tenants?
Tenants.
So can you tell the new tenant, "Hey, like, you have to start at this date, otherwise I'm gonna lease it to someone else,"
So
and try to push them up a week?
So you're saying that I got this tenant from the insurance company, you're saying?
Yeah.
And they're yeah,
So let's just say
yeah.
they wanna check in on the 15th, but
Mhm.
your existing tenant is moving out on the 7th. Can you tell the new one, "Hey, the 15th is great, but I need you to move in on the 8th, even if you might not stay there for a week, I need you to start it then.
I see what you're saying.
Otherwise, I'm gonna
It's
rent it to someone else that
it's
will move in on the 8th."
it's actually the other way around. It's
Oh,
actually
okay.
that usually when a claim happens, we need to move in now, right? That's ASAP. But really, we have flexibility, because I look at it the other way around. Typically, that's how we deal with it. It's more like we'll have an Airbnb guest in the interim, and then they'll say, "Hey, we need to relocate this family for the next 3 months, like next Monday." And I'm like, well, actually, my SDR booking goes into next Wednesday, so can we actually get you started the week after?" They have more flexibility, because the alternative is that tenant that's about to occupy my property is staying at a hotel in the interim. The emergency, if a pipe bursts right now, or you got backup sewage coming into your place and you got to vacate, they don't have time to find a homeowner right away. The immediate solution is to put you at a hotel and then find you a temporary solution. So we actually have more start date leverage rather than starting early, because it's more corporate. It's more like, hey, this family, when's the earliest they can move in? And then there's a bunch of paperwork that happens before that, and it has to be approved by the adjuster. So you don't have as much flexibility to get all the paperwork pushed in, be like, hey, I need you to do it early. It's more of like, you could, but it's more like when the family is ready to move in. So that's usually, you actually have more flexibility on the other end to move the
And
tenant
these
around.
insurance companies, are like residential insurance companies that there was a loss at a residential property, and then they're just gonna put the family into, a temporary spot, correct? It's not commercial insurance
Yeah, so that's
companies.
interesting actually, because I'm trying to think if someone's coming from a condo or a townhouse. What I know, what I can tell you is we deal 90% single family homes, right? Because these are homeowners, they're paying their premium, which I can tell you of how that's calculated, but these are single family homes. The thing is, if you live in a condo, most likely the product might be like a 2, 2, 2, 1, 3, 2, which then sometimes the hotel is not a bad alternative. But the reason why there's actually a big gap in this marketplace or opportunity is because the problem that we're solving is the 4 or 5 bedroom home with the backyard, with the 2 garages, that putting them in a product like a commercial kind of apartment type asset is not really a solution to their problem. They're not coming from a like kind property, right? So, but to answer your question, yeah, definitely single family. That's where the play is.
Yeah. What does like a average stay kind of look like? And then give me an idea like what kind of premiums that you're getting.
So I could tell you that, man. We'll get to the bag for sure. So there's two ways to look at it. Typically, it's going to be water damage or fire, right? Now the caveat is when they reach out to you, they'll say, "Hey, we need 1 month stay," with the possibility of extension. And so we know right away. If you tell me it's water, I know that's 3 months, 3 to 5 months, right? Water
Really?
damage. Oh yeah,
Wow.
yeah. It takes a while,
It's a
man.
long
Like
time.
you got to rip up you got to cut out the baseboard. You got to drywall, new LVP, like it just takes so long, like it takes so long. That's what it is. That's why. So 3 months, fire 6 months plus.
Yeah.
So now, that's important for negotiation because you talk about what the premium is. So here's the simple math, Rich. It basically, and this is what's fascinating. Someone might say, well, yeah, you're getting these premiums in that market, but it's relative to the value of the home, right? So the way it works is you got a $400,000 home. Everyone, whoever's listening to this, I would really encourage you, if you own a home and you're paying a premium on your mortgage, no one looks at this because who has the time to look at this? Once you buy a home, you get your insurance policy, you're good. But if you pull your insurance policy, it'll say a coverage D on there, loss of use, coverage D, additional living expenses. Those are all interchangeable terms on there. And it'll have a value on there. That means that value is derived from the dwelling unit's value. So which means if your property is worth 400,000, typically that coverage D is going to amount to 20% or anywhere from 20 to 30% of the home's dwelling value.
Okay.
Which means if you have a $400,000 home on the coverage D, it'll say that you have, if it's
100.
25%, it's 100K.
Okay.
Which means if something happens to your home, you're eligible for that $100,000 per claim. Right? Now, you might say, well, am I going to rent it up and file 3 claims per year? Well, yeah, if you do that, like your premium is going to go up. So it's not in your best interest, but it means that when an unforeseen event happens, you now have $100,000 accessible to you, which means if in that marketplace, which I can tell you for Georgia, for example, a $400,000 home in the metro Atlanta area could rent for $2,000. It would not be unreasonable for us to charge $8,000 a month, because there's $100,000 to play with to begin with. And
Now that
just,
that
yeah.
100K, that's outside of the money to cover the loss. So like if there's
Oh yeah, yeah.
water damage or fire damage, that 100K is not
Outside,
going towards that.
no,
This
that's
is
going
just for
towards additional
just for
living
additional housing.
expense.
Oh.
So if I got
Now
yeah.
these adjusters though, I mean, I know their job is to save the insurance money or the insurance company as much money as possible. So these adjusters, they don't balk at that. They're just like, here, take the full 100.
So this is where there's always an approval phase, because and this is what I would actually recommend everybody, because shout out to Andy, man. Like, to your point, the insurance company has their best interests.
Right.
So they're gonna want to make sure
Oh, I
that
know. We had our hotel here in San Diego flooded out with all the heavy rains in January, and they denied our claim.
Did you file it yourself?
We are now working with a public adjuster.
Boom, that part.
Yeah, we are
That
now
part.
working with a public adjuster, and they've since taken over. But it's a fucking process. This happened in January, and so far we've funded it with our own money, and it's been what 3.5 months now,
Yeah.
almost 4 months.
And so imagine if that was your primary, and this is why this is important.
Yeah, but
Imagine if
hold on,
yeah.
residential real estate, the insurance abides by different like regulations. It's a completely different
Because that could be
ballgame.
a whole lawsuit too.
Yeah.
Because right now that's
Commercial's
loss
like-
of business. That's
Commercial's
not,
like the Wild West.
yeah. Which is interesting what you're saying, because if you have an investment property, there's loss of rentals. If you have a primary residence, it's loss of use. So right now it's taking you 3 months. And that's the beauty of, if it's your primary and you got to relocate somewhere else, we tap into the loss of use until we figure out what needs to be dealt with for that claim. It might be going back and forth. It might be, but you need to live somewhere, and they don't want a lawsuit, because you're going to be like, hey, listen, like, if you know your rights, and most homeowners don't, You're not about to live on the streets for the 3 months until they figure out what they need to figure out for the claim and who's gonna pay for what.
For
You're
sure.
actually eligible for that 100K, which is beautiful for us investors who are catering to that marketplace because now, like, we've talked to families like 2 months, 3 months in, be like, "How's work going?" "Oh, work hasn't even started on our home." Well, we're gonna get that extension
Mm.
notice to extend over and over again. We had like our it's not it's very typical for you to start with a 2-month stay, 1-month stay, and it extends for 8 months. Because of it might take them 3 months to go back and forth, and I recommend everyone to get a public adjuster. We had a recent claim where literally the public adjuster added an extra 0. I think the company claimed like 2,000. We ended up getting 20,000 because the public adjuster handled everything, all communication, everything on your behalf. It's almost like having an attorney, right? To fight for you because there might be a small print that you might have not, or maybe you might have slipped up, and the insurance company might say, well, because of that reason and because you're using this for that reason, we won't cover that. Right. So you really want to make sure, yeah, you work with a public adjuster, which most people don't.
Yeah. No, absolutely. That was definitely our big takeaway.
Yeah, lessons learned. Yeah.
They initially denied our claim based on a conversation that the insurance company had with one of my team members, and it turns out we did a little due diligence. It turned out they didn't even do a site visit, and so now the adjuster is working with the company. They're going to reopen the claim, and it's probably good they didn't do a site visit because now they're going to reopen it. But we'll see. And but I think that's the case with a lot of commercial
Yeah.
insurance policies right now, especially in California. Is like I don't know if they have the money to pay all these people out. To be
Hmm.
honest with you. I mean, a lot of these buildings got water damage during the heavy rains in January. It was like the most rain Southern California has gotten in like 44 years in a
Huh.
short span. So,
I wonder though, Rich, if they're because I know we're just I don't know. There's an article that was published like, I think in 2021 there was a surplus, and again I don't know about commercial, but just for everyone's interest, like the premiums that you pay on the residential side, like if 1 out of 10 homes gets a claim, all this other premium money you're paying in goes into the markets. So they got all this a they had a surplus of they surpassed 1 trillion in reserves for that industry. So for me, I always tell a lot of people in our mastermind, like, no, they have money. You might have to fork out them. And I've done it. I've had the experience of speaking to an adjuster and extracting money. I know
yes.
you guys have the money. It might be you might not want to fork it over, but there's plenty of money that these companies make. I'm talking about trillions, not billions. I said trillions. That's facts. Like I looked it up. It's crazy.
Oh, it's a
It's
crazy
it's a
business.
crazy business, man. The insurance business.
I always say like insurance is one of those industries to where it's a great industry to be in because you're collecting cash flow every single month,
Every single.
not much overhead, and then you have basically adjusters on your team that will try to find every loophole not to pay out when there is a claim.
Yep.
Yeah, it's
Get
crazy.
yourself a public adjuster, man, because now you're going toe to toe with corporate, and they know the jargon. And if you get caught slipping, saying one thing, they might be like, "Yeah, we can't cover that."
Yeah. So give us an idea for listeners out there like, okay, maybe I'm interested in getting in the mid-term rental game. A 4-bedroom property, let's just say that, what in your market, what would it rent for long term? And then what's an average midterm price that you're getting monthly?
Yeah, sure. I'll give you a perfect case study. So, by the way, 4 bedroom, 4 to 5 bedroom homes. That's our sweet spot. That's our buy box. That's all we buy because we know that that's solving the bigger problem of the family of 5 with 2 dogs that need to relocate. As a matter of fact, here's the math that you need to do, that the insurance companies are actually getting a discount from us because if you were to take a family of 5, put them in a hotel, you do the $200 a night, or maybe it's the 180 or whatever it is, right? They can't put you in a motel equivalent. It has to be a certain tier. But you do that math. Maybe it's 2 bedrooms, and then you do the cost of what people don't factor in. It's the cost of the kennel. If you have 2 dogs, the kennel fees in Atlanta are going to be $80 a day. So when you run that math, you realize that a family that needs to relocate at a hotel for the next 30 days might be up anywhere up to like 18,000, 17, something along those lines. So if you do that math, and then you go back to like, well, if they're staying with me, so I'll give you an example. A house in Atlanta, typically overhead anywhere from 2,000 to now with the interest rates going up to 2,400. So I'm sorry, not interest rates. When I think overhead, I do think mortgage, but renting, similar. It's like, this is why long-term rentals don't make sense anymore because you're barely making it work with today's interest rates. So you might be looking at, or you might rent traditionally a 4 bedroom home in Atlanta for 2,000 or 2,200 a month. Okay. On the STR side, you can make probably 5K, top season 7K a month. on the MTR insurance side, we average 79.50, so anywhere from $8,000 a month, but consistently and 100% occupied. So really, you're looking at a 4x multiple.
That's great. And like on the STR side, you mean you got housekeeping, you got
Turnovers,
supplies.
headaches.
That's a lot of cost baked in there. But on the midterm side, I imagine you don't have all those costs, right?
Well, you don't. But what you can do is add admin costs. Like corporate is used to that. So you do like I have an admin fee to write the contract. You can have a pet fee. You can have that's typically what we do. Pet fee, you do have, and then you have the security up front, but you're baking that recurring revenue in at a premium, and you don't have to deal with all the headaches of like as soon as the turnovers, the high turnovers, the guests complaining. As a matter of fact, that the avatar is completely different. They're so gracious that they have a new home to stay. I'm so serious. Like when I see the messages, I'm like, thank you so much for letting us have a home away from home while our home was getting repaired. We're so grateful. Thank you. Like over and over again. I'm like, listen, I'm getting paid for this. Like, I'm like, it sounds like you're thanking me. Like, but the STR, and rightfully so, when you're coming for a 3-month stay, I'm coming here in San Diego and I'm booking it and I see one thing that's wrong and I'm paying a premium for those 3 nights. I'm entitled to have you correct it right away. When I'm staying for 6 months, something's wrong with the house, is there's so much leeway to be like, hey, we'll send the guy out for Monday. Is that okay? Oh yeah, yeah, no problem. Thank you. So it's a whole different experience for any homeowner who's out there who's getting burnt out. I always say, like for my wife and I, when we do the hybrid and we're like, we get, an entitled kind of SDR guest, we just look at ourselves and like, we're in the right business. Cause like it's complete night and day from an operations perspective.
If you love real estate investing, passive income, and tax benefits, but don't have the time, my company, Summers Capital, is buying boutique hotels right now. We source the deals, we renovate the properties, and we even handle all the day-to-day management, making it truly hands-off for our investors. If you want to learn more to see if we can help you, visit summerscapital.com/invest to book a call with our team. Again, that's summerscapital.com/invest. Now back to the show. With those spreads being so high, do a lot of folks go out there and like try to do like an arbitrage, just like rent and then like sublease as a midterm rental? Because you're talking renting a place in Atlanta for 2,000, and you could potentially get 8,000. That's a big spread. So are you seeing a lot of folks go out there and do it where they don't even own the real estate?
Yeah, totally. That's so for me, what I'm seeing in our community, and shout out to Dr. Rachel, because I know she just had a program where she launched on that, where she teaches people how to do that. Totally, there's a play there. And if you're gonna do that play, there's 2 things. You're gonna know the STR game, right? And you know your STR numbers going into it, so you know that if you don't have an MTR insurance contract, you know what you're gonna make so that you can make enough spread. But then additionally, if you're a co-host, right, which a co-host is a term that's been used around where there's another Airbnb owner that owns the asset, and you're coming in and you're essentially running the operations for them, and you're getting your spread. Typically, it's 28.80. I think you're familiar. I'm just for the interest of anyone who might not be familiar with the term. Now you have an additional kind of angle for your business where you can let homeowners know, hey, by the way, not only do we do SDR co-hosting, but we also have relationships with insurance companies where we can actually get your premium. And we've done that, right? We have a few folks where we co-host with, and we've gotten them like way higher returns, and everyone's happy. But I would suggest if you're going to do that, because the premiums are so high, I would have a separate contract that when I do get a corporate contract, is it still 25.75, or is there some kind of tier structure? Because it takes work to build the relationships, to foster relationships, but when it comes in, it's peace of mind. You don't have to worry about that property for the next couple months.
What's the biggest risk to midterm rentals?
Risk?
Yeah, what's the biggest risk, or what's the biggest challenge in your opinion?
Challenge that I hear the most, it's, hey, I got an inquiry, I responded, I put my proposal, and I haven't heard anything back, right? And the reality behind that, so the risk, I would say, is not being able to have data that can guarantee. I think people are looking for guarantees. Hey, Ruben, how can you guarantee that I'm going to get a contract? And it's nuanced. There is no guarantee. It's a relationship business. We are almost, for lack of better words, and when I say we, it's not just us, right? A lot of people who you can build corporate relationships where it's kind of like, hey, Rich, you got anything on your desk, pal? What's going on, right? Because you're talking to your avatar is the relocation specialist, right? Relocation specialist at each of those firms. You want to build a relationship for them, right? Send them cookies, right? Or hey, what's going on? What's going on in your life, etc. Hey, how can I help? By the way, are you looking for any other claims in just in this state or another state? Oh, well, if you're looking in that state, I got another operator in this state. Like, serve them because they're gonna keep you top of mind. I have some folks, some ladies that reached out to me where they just know Atlanta. They think of Ruben or my obviously my team Invested Escapes, to like reach out to them. They always have something,
Yeah.
right?
So it sounds like, I mean, any other niche within real estate or even business, it's all about the people.
Dude, it's the same thing, man. Like you go around like
You got to connect with folks
it's it.
and you got to shake hands
That's it.
and be a likable person.
It's an insider game, and it's a corporate. Like at the end of the day, it's corporate housing. Like we say MTR because it's sexy now. It's this new term. It's corporate housing. So who are the corporations that basically control all the relationship with these insurance companies that need to know you in your marketplace? And by the way, there's not that many. And by the way, this is what to me, this is where I think the big play is because just like in financial advisors have a book of business, if you have a book of business of relocation specialists that when they call that you pick up, to me, that's a sellable asset that you can sell later on.
Mm.
And that is what you should be building. You're building a list, a vetted list, quality over quantity. And then you have the real estate. We like to own our real estate,
You like
right?
to what? Own it
Own it.
because you get the depreciation.
Oh, yeah, man. I mean,
So you get to depreciate all that cash flow
yeah.
because you own it and you're getting cost seg studies.
Yeah, dude.
Got it.
I mean,
I love
it's,
that.
it's crazy.
So for a listener out there that's like, hey, you know what? I like the sound of this. I got a couple single family properties already. I want to get it in the midterm game. How do they get started? What's the best way?
Yeah, I'll give you the game right now. You got to put it in the existing databases. I'll give you some top 5 companies that you know, and all you have to do is go on their website. Some of them you don't even require pictures. If you have, maybe a dozen properties or maybe it's just one, just put it in there like today. A lot of people say, well, there's someone in there right now. It doesn't matter because when they call you, I have this thing where I say, I'm probably gonna make a t-shirt and send it to the team, right? The contract, the contact is more important than the contract, right? So when someone reaches back out to me, right? Right. If it's Parker reaches out, he's like, hey, is this property available? It's like, it's not right now, but you know, how else can I help? Or it's like, it's not available right now, but like, are you currently looking in this area? I want to get the contacts information because it's going to be in your best interest down the road to be able to serve them in the future, or at least have that relationship, right? So put them in ALE Solutions, put it in CRS, temporary housing, THD. Actually, they got bought out by Alacrity, right? And another thing is putting it on Zillow Rental Manager. That's where they're looking. They're looking for, they either go to their databases first and then they start looking on ALE Solutions. And then please do this. I would set up a whole new profile on your Airbnb for corporate housing. Set your 30-day minimum and remove instant book and have a separate account, which you can integrate with your PMS later. You can figure that out, but have a separate account that has at least availability for the entire year. Because the reality is when I'm looking to relocate a family for the next 3 months and you got STR bookings scattered all over through June, July, etc., then you don't pop up through the search. But if you are available, then we open up the conversation. Hey, listen, I might not be able to get you in next Monday, but about 2 weeks from now. If it's a family that needs a relocation for the next 6 months and that's the best available property, they'll wait 2 weeks.
Is there a play of just like throwing these listings on Airbnb and Verbo and just doing 30 days or more and just trying to farm listings that way?
Farm like interest?
Yeah, just like, hey, I'm not going to go get contracts from insurance companies or like corporations. I am literally just going to throw these listings on Airbnb, Verbo, and set my minimum of 30-day.
Yeah, that's a play.
Can you do okay?
Yeah, that's a play. You just make sure that, because the thing is
It's part of Ruben's playbook.
It is.
Okay.
A little bit more of a strategy towards that. If we have more time, it's, you want to have 2 listings for each property. One short-term rental for the hybrid and one for the MTR, right? The MTR one has to be available throughout for the next year. And it's just a lead generation play. Absolutely.
Okay.
Yeah.
I love that, man.
Yeah.
So, you're in a few masterminds. Are you part of Mike Sjogren's?
Yeah, he's a partner of mine.
The boardroom?
Yeah, boardroom, yeah.
Got it. And you have your own.
Yeah, I have my own.
Tell me about your mastermind.
Yeah, so we did a pretty cool thing, man. We have an inner circle where it's kind of like, what happened? So a lot of people like, you'll come to the conferences and they're like, yo, but that's your competition. No, it's collaboration. So if I'm 100% occupied and I fostered a great relationship with you and you're a relocation specialist and you reach out to me, you got anything? And I don't, then guess who I'm going to? The members of my mastermind. And so we have an entire channel that has like a lead generation channel. We're like, hey, who's got availability here? And now they keep on coming back to us because we're able to actually supply the demand, right? So the inner circle that I have is for a lot of people who own in Georgia, where we have kind of a buy in a box where I have a team. They'll help them purchase, and then I'm phase two. You come, we coach you, and it's a done with you approach. And that's fascinating because I get to kind of see the process of people standing up their property, setting it up, and again making it SDR friendly. Because remember, one of the key takeaways is when you have, a property that doesn't look as good, like a lot of properties on Furnish Finder, I think SDR operators are in a perfect position to put up with a product for the MTR stay because it's just better than anybody else's long-term stays, right? So that's what we do. We teach people how to do that, optimize, a lot of optimization, and then we tell them which databases to put the properties in, and we also help them. We'll broker a contract. If I'm 100% occupied and you're in my mastermind, I'll send it to you. So that's one thing, and we do that. So that's, you can definitely tap in on the website for that. And then me and Michael actually partnered, and I have
Showroom?
yeah,
What do you guys partner on?
I have an MTR Secrets. So basically, his whole academy is all about short-term rentals foundation. So I'm like, well, what does it look like to add another tool to their tool belt for the folks who want to run that hybrid play? And so we partnered on I'm coaching the STR Secrets group and anyone who's in that vertical and that, his hub of, we put out content for them to kind of learn done with you, and we will put out contracts, how to do proposals, how to optimize your listings, etc. So whether you have one property or you have 50 of them, to start being able to actually capture a lot of these leads.
Yeah, I love that. So MTR Secrets.
Yeah,
It's a
come
nice little
on.
spin right there.
Absolutely. Yeah,
I love
man.
that. Yeah, I'm a big fan of like these different masterminds and groups. And so it's always unique to kind of hear about how everyone does their own. But yeah, I'm a big fan of it. So it's definitely a way to shortcut the path from like point A to point B in all directions. And that's how I got into multifamily.
Yeah.
And that's how I started like learn how to like, underwrite larger deals and get into syndications and how to like raise private capital and asset management, like literally the A to Z. I learned through platforms like that. So it's
Yeah.
definitely huge.
No, it speeds up the process, man. Like I invest so much in it to learn myself. That's what it was originally. I invested myself to learn how to do this. Shout out to Rachel. She had a program too. And then we kind of she tucked me under my wing and we kind of collaborated on a coaching as well.
Yeah, I love that. So your wife is in town with you. When do you guys head back home?
Ooh, so we're gonna do LA a little bit. Well, yeah, we know we got some friends out there. And then we're gonna do. I haven't done this. I haven't done Malibu yet, so we're gonna go to Malibu tomorrow.
Nice.
Maybe do some wine tasting, stuff
Oh, a
like
little
that. Yeah,
wine.
well,
What
I'm
kind of
saying?
wine do
I
you
get
like?
cute. See, I'm white wine though.
White
I'm
wine?
not like she's the wine
Sauvignon
drinker.
Blanc,
So see,
Pinot
Sauvignon Blanc. Of course, I'm
Grigio.
French. Oh, you know that?
I didn't know you're
Yeah, I'm
French.
French, man.
Really?
So yeah, like the Sauvignon Blanc.
Okay.
I'm
Okay.
low. I'm low. I'm not high maintenance, but the fact that I have to say that, I know if she's listening, she'll be like, he's high maintenance.
Yeah.
Yeah.
I love that, dude. I love that. Well, bro, I appreciate you coming on and hanging out, dude. I'm a big fan of everything that you're
Me
doing.
too, man.
You're always good spirit and good vibes. And every
Thanks,
time I
bro.
see you, man, it's it puts a smile on my
It's
face,
love,
dude. And I
man.
appreciate you always supporting everything that we're doing. And I want you to know, man, yeah, I'm a supporter of everything you're doing, dude. I'm a fan. So keep crushing and
Dude,
keep
thank
inspiring.
you. And let me put this on the air,
Yeah.
man. Like I think I'm definitely very inspired and really respect mastery. And what I've seen you do, I think I told you this in person, but I want to tell you on the air, man, is like the rich that I saw when you came on the pod and the rich that I saw in Nashville, the way you were breaking down, it was just coming off so smooth and just so like I do this. Like it was night and day. And seeing that
Oh, the
evolution
difference
is
from
cool.
when I came on your
Oh,
podcast
100%,
to
bro.
when I was in Nashville
100%,
speaking. Really?
100%. Yeah, mastery. Because I remember even asking some questions and you would say and your answers were different. Like you were just on your P's and Q's, and that's just level of like just doing the thing, educating yourself and doing the thing. And shit, I think you've achieved mastery, bro. And like I respect that because I when someone's working on their craft and you obviously, you're raising capital, etc., you're on top of it. And I told you in person, bro, but I
Dude, I
won't say on the
appreciate
air.
that, man. That
Yeah, it's
means a
nice to
lot.
see.
Because I'm in the mix every single week, so I don't sit back and actually look at the difference, right?
Yeah.
But I do know like when I'm forced to like do everything that I'm doing, running tight schedules every single day, you're forced to kind of grow at a quicker clip
Yeah.
than I was ever before, and so yeah, it's a fun thing, and feelings mutual, man. I see you ripping it and the growth, and everyone in the industry definitely speaks highly of you. So
I appreciate
keep
that, man.
encouraging, keep inspiring. Where can the folks get in
Thanks,
touch
bro.
with you, man?
Oh man, Instagram probably the real estate experiment. And
Go check out Ruben's podcast. I was a guest a year ago.
yeah,
Great pod. Check it out. You do what? One episode a week?
yeah,
I
we are
love
like
that.
we're just under 280 now.
280.
Yeah,
Damn.
we've been ripping. But
And once a
consistency,
week.
yeah,
So
once a
you've been
week.
doing it for what? 4 years?
Since yeah,
5 years?
yeah.
Hell yeah, dude.
By
Look
the
at
way,
that.
man, like the ultimate hack. It's unbelievable. The
Podcast?
relationships, I've gotten deals from podcasts. Like the relationships, it's unbelievable. Like it's a master class. You build a relationship, you have a master class, and then by default, you kind of build a community just because the questions that I ask are the questions that people are listening have. And it's been really, honestly, that was very heartwarming to hear people like really listen to the pod that I had no idea. They're like, man, I listen to your pod. But it's just like the community and the insights. And then like we connected and then the partnerships that come from it. I think it's one of the most underutilized tools in this day and age. Virtually, you can have a Zoom, you can have a mic, and you can reach out to people. And the thing is, most people who've achieved mastery like yourself don't actually get these opportunities to speak about what they do. And what do people love? They love to talk about themselves. And so if you can get in front of them, I'm telling you, man, like my first episode, I had no real estate and I had a gentleman that owned 300 million assets under management. And my biggest fear was that he would ask me how many I own. And I was a living belief. Go out there, man. Like if you're trying to buy businesses, reach out to Codie or something. Maybe it might be hard to get through her, but you do some things. I've gotten some people where we had to do 7 follow-ups. You get them on, you build a relationship. It turns into partnerships, businesses. That's how my agency was born,
Yeah.
from the podcast.
Dude, I feel you, man. It's funny because I'm similar too. When I started my first podcast, the Multifamily Takeoff, which I had for 3 years with my old partners, they're still ripping on it. But I started that basically like right when I was getting my first deal. So I was so raw and so green. And we were interviewing all sorts of folks. We had Grant Cardone on
Yeah,
episode
dude, that was
22.
dope.
And it was like episode 8, I want to say. We had John and Tony Azar. And because of that episode, they decided to mentor us in the multifamily space. And so I don't know, man. I think the podcast is a secret sauce. I talk about it all the time. So, if you're a business owner or a real estate investor and trying to grow your business, I think the best thing you could do is start a podcast because it hits your long form, and then you could chop up the clips and shorts, and then it hits your short form as well. You almost don't have to like record short form,
100%.
which is pretty cool.
100%, bro.
But there it is. He's Ruben Kanya. I'm Rich Summers. Listeners, thanks for tuning in. We'll see you in the next one. Peace.